Hi guys, just going to give this a couple more minutes and let the last of the attendees to join, and then we will get started. So thanks for everyone's patience. Okay, we'll just give it another minute, guys, and then we'll get cracking. Thanks for everyone's patience. Okay, guys, so thanks to everyone that's joined. It's great to see so much interest in API Global and what we do. So looking forward to taking you through the presentation. And as I say, appreciate everyone who's taken the time to be here today. Presentation is designed really to share insights into API Global and what we do, and hopefully some practical takeaways that I'm sure you'll find valuable and relevant to you as well. So to introduce myself, I'm Jonathan Cole. I'm the Global Head of Business Development here at API Global. And we also have Sam Crabtree with us, who is the Global Head of UAE, who will be speaking shortly on the UAE market and a couple of our flagship projects. So to introduce API Global, we were founded around 13, 14 years ago now, really with the mindset and goal of enabling international investors access to the global property market using our end-to-end solution. So as you can see on screen, we've got a complete global presence and a global reach with offices throughout the world. We now have 16 offices with more to come throughout this year. In Asia, we have offices in Hong Kong, Singapore. We have Vietnam and Thailand, Australia. In the Middle East, we have Saudi Arabia and Dubai, where both Sam and I are based. And in Africa, we have Nairobi, Lagos, Zimbabwe. South Africa, we have Johannesburg and Cape Town, Sao Paulo and Santiago in South America, and two main offices in the UK in Manchester, and our head office situated in London. So what do? We essentially help partners and clients globally access the property market with a hassle-free end-to-end solution. And I'll expand on this shortly. For me, this is really the main thing that stands out from our competition, the end-to-end solution. Other companies like us, they may well help with selling a unit, and that's probably where the process stops. For us, that's very much where the process begins. We like to act as a one-stop shop for our clients. And this ultimately is what we provide with the end-to-end service. So I'll touch on that now. So essentially what we do, we primarily act as a researching and due diligence team with an experienced sourcing team to analyze and assess whether or not we should look at certain projects in certain areas. They look at it on a case-by-case basis from developer to developer, making sure that any project that we do take on, there's an investment case there and that clients will see a return on their investment. We partner with the most credible, reputable developers globally, often acting as their master sales agent. We've got partners and developments currently in the UK, Thailand, Bali, and the UAE as well, which Sam will touch on shortly. Secondly, it's about the investment advice that we give clients, making sure that they understand the cash flow, they understand the fundamentals behind the project and the investment case, and making sure that the client has a complete understanding before they proceed with purchasing. The next part is we have our in-house sales progression team, which makes sure that exchanges and completions happen in a timely manner. Solicitors in-house acting for both the buyer and the seller ensure this happens. The next piece we offer is our in-house and tax and accounting team, essentially dealing with clients in global jurisdictions, buying properties globally. They ensure that property is purchased in the most tax-efficient manner for the client. I won't go into too much detail on that. I don't want to bore you all to death, but we've got a tax and accounting team that specialize in those sorts of things. The next piece is the in-house mortgage team that have experience helping clients globally access finance with over 100 lenders on the panel. We also have an in-house lettings and management team, which once the unit is complete, they help with tenant referencing, tenant sourcing, making sure all the relevant credit checks are passed by the tenant to ensure that we get good quality, long-term tenants in the properties. They now manage close to 2,000 units throughout the UK. And they make sure that if there are any issues with the property, they manage it on a day-to-day basis and make sure that the investment is hassle-free and hands-off for the buyer. Finally, the last piece of the jigsaw that we offer, I suppose, is the portfolio optimization advice. And that's ultimately how we help clients maximize their portfolios and build multi-unit property portfolios through things like equity release plays and so forth. Finally, just to touch on the size of our company and the scale that we operate, we've delivered in excess of over £2 billion worth of real estate in gross development value, equating to over 5,000 units. Interestingly for me, and what makes me really proud to say, is the majority or a large portion of our business is with repeat customers. So that's clients that are buying multiple properties with us over periods of time, which shows that ultimately the service that we provide, clients are happy with. And that ultimately for us is really the main goal, making sure that we have satisfied and happy clients. I'll hand over to Sam now, who can touch and talk a bit more about the UAE market in general and some of our flagship developments.
Hi guys, and thanks very much for the introduction, Johnny. So I'm Sam, as Johnny's mentioned earlier, head of the UAE, and really I'm here today to help break down the investment or the attractive side of what your clients or yourself can gain from investing in the UAE. And fundamentally, that's been built or is a natural transition for us as a business from our UK model, where we've had success over 14 years and now entered this market over the last 12 to 18 months with the same opportunities and the same foundations that business saw so much success on. Now, why the UAE? Essentially, globally, we cannot get better returns from a real estate perspective. It's offering growth that we can't compare. It's offering yields in city centres that aren't comparable. On that basis, it's got global attraction and everyone's wanting to look and invest to some degree. The opportunities that we can present them are unique in the way that we've got early access to certain developers with certain developments. For example, our most recent launch saw a 5% pre-launch discount, which made people very happy from the onset, meaning a quick 5% of equity was secured. Exclusive opportunities also come in the form of a building that was underwritten by a partner of ours in Abu Dhabi, which allows for entry that no one else can get in the local market. And on that basis, it's the lessons we've learned from the UK, again, that we've transitioned here. We're also in a position where, due to scale of economy, we're negotiating payment plans for you and your clients, which again is going to relate to higher ROI. We've got the investor mindset just as much from a buyer's perspective as a sales perspective. Okay, we're negotiating the best deals possible. The fundamentals of this market is really what's led us to entering it. Okay, I always have a joke around, and the performance that we've seen over the last 10 years can't be replicated to some degrees, but the fundamentals are allowing for that to be a maturing phase and grow. There's escrow for any accounts that developers are launching, RERA and DLD between them. They're authorizing and regulating the investment from start to finish. From a tenant perspective or a landlord perspective, you've got a digital product in Dubai Rest, the Dubai Rest app, which allows you to look at title deeds, your tenant history, etc. All in all, it's making everything so smooth from start to finish. On top of that, it does offer a tax-free earning potential if you are here, but again, that's applicable to your residency status. I think the main ballpark of investing comes from the fact that the growth aspect, but secondly is the tourism that the country sees. It's a very liberal environment. There's a lot of growth and opportunity from a company perspective, from an individual perspective, but that's all being harnessed through the fact that it offers a safe and secure environment from both an investor perspective, but also from a tenant perspective, where they live, where they breathe. In tourism, we see 290 million passengers come through on a yearly basis. Al Maktoum Airport, the new development of that airport is going to see that number keep growing. Okay, the Middle East is very transient in the way, we're very connectable to Asia, Africa, and Europe. So on that basis, it makes this as a central hub. So many people are passing through, and it's about retaining that capital, which is really, from the government's point of view, what they're trying to do. Very highly regulated, and a common misconception is the ownership. Or the ownership status that you get as an investor. You are a freehold landowner. There is no leaseholds available, and that's a misconception and gives you a little bit more strength in your investment moving forwards. Now, Dubai's come on a lot of our maps, from an international perspective. A lot of the conversations I have more recently than, the progression really alludes to. Dubai's been quietly building in the background for 50 years. Most notable developments for an investor are the Burj Al Arab in 1999, the Palm in 2007, or the Burj in 2010. That put Dubai on the map from an international recognition stage of these landmarks, these attractions. But what's actually driving Dubai behind it is the government money, is the private money, is the 2040 master plan and the D33 economic agenda that gets it from A to B to C financially, i.e. where we're looking at it from an investor's lens. And it's these initiatives in the current day that are going to take us to the growth forecast of 2040. And we'll touch on them in a bit more detail. The third aspect of really attracting and retaining talent is the golden visa. On the face of it, it's just residency for somebody outside of the UAE, but really behind it is a mastermind plan to retain capital from those that are adding to the economy. Any investor that is investing in property or any other asset, but we're focused on property today, can attain a golden visa, and you need 2 million dirham to do so. That 2 million dirham is the threshold to get the 10-year status, the 10-year residency status. With that residency, you get your family, you get your spouse, you get your domestic staff to join you on that. You get a UAE banker, you get a UAE setup. That makes this place more livable from a transient perspective, especially if you're flying in and out. But the main one for me, again, property investment is why we're here, is the mortgage rates that we're able to attain. In simple terms, if you go for the golden visa, you or your client purchase a property at 2 million dirham, you can get residency rates at 3.99% and below. You can get overseas rates at 5.49% and below. The difference in interest over that lending term is around 250,000 dirham. The cost of a visa could be sub 20,000 dirham. So from a structural point of view, this is part of the investment. It's not an add-on just for residency. And that changes the dynamic of getting a visa and how we offer that out to clients and investors. The 2040 master plan is one of the key drivers, and that's going to take us obviously to 2040. Then we've got a new initiative to be launched. Now, the main driver for this is the population growth, or let's say the supply and demand imbalance that creates. As numbers and residents continue to increase, is demand keeping up? On the face of things, where we look around, we see building sites everywhere, you'd think so. But in actual fact, that the numbers are being far outweighed. What we've got here is two very transparent platforms that we'll touch on later on, but they show the numbers in layman's terms. And when we break them down, demand is growing a lot faster than supply. Dubai surpassed 4 million residents on the back of 2025. that target of 5.8 by 2040 is being fast outpaced. The targets, or the forecasted population now by 2040 is 6.8. Okay, again, testament to the government and how they're spending and how they're attracting and retaining talent and families, how they're retaining and attracting those corporates that drive the footfall, that drive the livability. Other factors on screen that you can see all relate to the livability of the environment: green spaces, beaches, road networks, being connectable to any part of the city in 20 minutes. That all adds to to keeping people here when they arrive, right? But the main driver for us from an investment perspective is demand is outpacing supply. It's a vast area to navigate. And I'm here to break it down along with Johnny as we talk to clients and we educate you on the process of investing. But, Dubai's landscape presents opportunities in all areas. How we broke down Dubai is in a simple skeleton. And we do that in very surface level terms for today via the road network. You've got Sheikh Zayed Road, which runs off the coast, which forms Zone 1. You've got Sheikh Mohammed bin Zayed Road that forms Zone 2, and the E311 or Emirates Road that forms Zone 3. You've then got your outer zone, Zone 4. When we break that down, we can see the price per square foot gradually reduce as you go further south. But it starts to make sense where opportunities lie, where growth factors are more reliant on infrastructure developments and further master planning. But depending on your client's risk appetite or their financial goals, we plop them into various areas that make sense. So it's a long part of the presentation which we need to go into more detail, but it's something that we'll focus on as we run through the training. The second initiative is to be complete by 2033, which is a relatively short initiative, but it's nothing short of staggering in terms of the numbers that's being attracted. The D33 economic agenda aims to double Dubai's GDP via 2033. That in itself is doubling the economy, it's bringing in global companies and talent, and it's making Dubai that financial base. Now, whether it's 25 trillion from foreign trade, 700 billion from private investment, government investment, whatever, it's the attraction of talent and money, and it's keeping that capital here that matters. The points I want you to take note of today and really walk home with is the two on the bottom of the screen. What this does in retrospect is put Dubai as a top 4 country with a GDP doubling. Okay, it's currently ranked 11th via the Bloomberg ranking system. Every city you can imagine is in front: Shanghai, Tokyo, London, New York, Singapore, etc. Now, when we look at property price per square foot in those core areas, and then when we look at the DIFC downtown Business Bay in retrospect, we're looking at probably a 30% growth margin at the very least. And that's where we can see the growth opportunity in core areas especially, but then further afield. And when we highlight those numbers on the surface, that's where Dubai is really at the beginning of a market cycle, as opposed to what some would associate as the end, because the price per square foot is at an all-time high. And that's the common question and the common objection that we're facing at the moment. And when we boil down the numbers and look at things from a logistical point of view, it really makes sense, because Dubai is in conversations with these big names, but the property entry point and rents do not necessarily associate it there. So a lot of growth to be had. We only work with proven developers, tier 1 developers, okay? Again, when we relate to the UK model, that has got us many happy clients. That's a safety net for investors. It makes sense from start to finish. We're working on exclusive positions with each one. We'll always be at the forefront of investment advice when new and upcoming exciting developments are coming, okay? But in that, again, just putting your clients in the best position possible to gain the most upside with the least downside. The expression of interest is something taken worth note of then. When certain developments from certain developers come into the market, there's a lot of noise surrounding them. What happens is they sell out with a very short time frame. It's unbeknown to any other market globally, right? But it's something that we need to be in a position to take advantage of, because after all these people aren't jumping forwards at a development that doesn't make sense. What happens is we take an expression of interest or an EOR, you might hear it being coined around the market. That expression of interest gives you access to this development through us, through a check or some sort of capital that shows you're there to buy. What it does, we secure early access, early pricing, gives us the best access to best developments. Okay, we're locking in value on day one. That's something we can work on, that through education and foresight, we can put clients in the right position to be in the right place to take heed of these releases. Ultimately, it comes down to protection. Okay, again, UK model, what are we looking at doing? Fund security is in escrow. I touched on the transparency of this market. Now, the transparency of the market is done through two platforms. One's called DXB Interact, and the second is called Property Monitor. In tandem, those two regulate and show true transparency on the market. Every rental contract and every property transaction is recorded on these online platforms. That means we can showcase property values, rentals in today's market, and show where the numbers are that we're getting on our cash flow. Again, not just us. You can fact check anything on there. And it makes it really important with making an informed decision. The low capital exposure is us pre-negotiating payment plans with developers. It must be said, on some of the projects, it's just not attainable, such as the ones that are selling out on launch. The developer's in a position that they can demand what payment plan their clients are going to adhere to. But ultimately, this is about portfolio support. If you've got any property at any part in any part of the world, for example, our first protocol was refinancing our UK client base and bringing them over. For those that have had growth over the last 5, 10, 15 years, it was an easy transition and an easy diversification tool. That portfolio support doesn't stop here. It will go back to the UK. We're playing on currency, we're playing on FX. If you need a lifestyle property in Bali or Thailand, we've got options there. Okay, but that's what we're here to do, is we're here to leverage and grow your portfolio off that initial investment. And that's really fundamental in how we differentiate ourselves from the market. I think there's 3 core strategies to consider. We've got the core and prime areas. It sort of says it in the title, right? Investing in zone 1 areas, downtown DIFC, etc. There are 2 emerging cores, or one in particular in Dubai, which many of you may have come across in Expo, Dubai South area. You know, it's a core focus for us in terms of getting clients that capital. Okay. Then you've got the growth communities where we can get that added value. Your investor that isn't necessarily after yield, wants to chase the appreciation, wants those higher returns, a little bit more foresight's involved. We're investing where infrastructure's to come, as opposed to maturity and infrastructure that's developed. Finally, for institutional buyers, for anyone that's a conglomerate of buyers, for people that want to come together, we're in a position to negotiate discounts. Generally, they start at 7 units and above. But again, those 3 strategies are seeing a lot of success in this market, and it all depends on what your financial goals are. I just want to touch on payment plans. Okay, it's very important to understand, for those of you that have invested elsewhere, such as the UK, you know, the payment plans are very easy. It's generally 10, 20% down and then the rest on completion. Here they are a little bit more cash intensive. Okay. For example, if you hear of a payment plan that is 50-50, the first number relates to what your capital outlay is. The second number is relating to what the mortgage amount is, or what is to be paid on completion. However you settle that second number is down to you. Okay. But for example, on One River Point, for example, our flagship launch in Business Bay, it's a 70-30 payment plan. So 70% needed on upfront by you and 30% via completion mortgage, let's say. But we pre-negotiated for our clients 50-50. Now, how that 50 is broken down isn't 50% upfront. It's generally 20% to book the unit, plus your 4% Dubai land department fee. You'll then go into a payment plan based on percentage of completion of the property. So there's another 30% of the property value to be paid over the 2-year build, or if it's a 3-year build. So the payments actually get nicely spaced out. Again, there's conversations to be had. If you're waiting on a bonus, if you're due, you know, inheritance or anything like that, we can have a conversation with the developer and try and adhere to make it as easy as possible. The second one, Yas Riva, for example, in Yas Bay and out, in Abu Dhabi. This was an example that we had 5 clients come forward with an EOI. They put the expression of interest in because the noise surrounding Abu Dhabi, and we were able to secure them a unit. This payment plan wasn't interchangeable. It's more capital intensive. It's 65%, but it's 5% as the first payment, 10% thereafter, and then you can see the payment follows on screen. The build phase, or the build time for that, is just over 3 years. So again, if we can make the investment relate to your investment, the payment plans aren't as intense as you once think. You don't need the capital up front, is what I'm saying. I just want to touch on one project and our most recent launch while we've got everyone on the call today. And it's called Alteria Heights, and it's in an area called JLT. To put that into action, our office is in JLT. It's the second business hub in Dubai. It's got over 100,000 workforce. It's got 26 clusters of towers. And in that, it's a mix of commercial and residential. What it lacks is new build high-end living. You know, from the likes of Google, Snapchat, TikTok that make JLT their home. These tenants, these executives, they need a higher standard of living to live or to live near work, if I can get my words out. But there's 4 towers, Tower 1, 2, 3, and 4 from right to left. Tower 1 and 2 is where we've taken our position. We've got exclusive units for our clients. There's also a 50-50 payment plan being negotiated. The build frame on this is 4 years. So you've got 50% of the capital to go over a 4-year build time, which is great. This third building, buy to rent scheme. Fantastic from all of the lessons we've learned in the UK. Developers hold units where they believe in appreciation and rental. The fourth, this will be released closer to market completion at a higher price. There's equity to be had, and there's rewards to be had for first come, first serve investors. We've got views out onto Jumeirah Islands, which is the #1 villa community, and has a 2-to-1 land to lake, land to water ratio. So lots of natural water views. And behind you can see the JLT skyline. Location sells developments, right? It's not a hard decision to make when logistically it makes sense. You've got Jumeirah Islands in front of you. You've got the DMCC Free Zone Tower. That's the biggest tower in Dubai, in JLT. It homes a 5-star hotel. It homes many residents and many grade A office corporates. Here we've got Uptown Dubai, 2 commercial towers, which is the crypto hub of JLT. And we've got 2 towers just to the left, which is Mercer House, a complete and sold out Ellington development. This is also Ellington, which would be worth me pointing out. But again, 2 sold out developments. These corporates will fuel the tenant demand in Alteria. Okay. Uptown rents, which is built and complete, can be used in our cash flows for the Alteria rents. 1 bed, you're looking at 8.5%, 2 beds, 9%, 3 beds, 10%. Gross yield. The rents are very attractive in today's market. We don't need to blow them up or glorify them in any way. Rents are taken from the tower next door. Very straightforward. Behind you've got Dubai Media City, then got Dubai's lifestyle corridor. For any of you that know it, Dubai Marina and the Palm is just in the near distance. Okay, so location's key. Lots of drivers for this investment. Won't touch on this too much, but you can see it's a high-end development. It's got anything from a clubhouse with a wellness resort, a gym, 3 pools, infinity pools, 2 paddle courts, gardens, outdoor areas. The whole point is it's like a members club. Tenants don't need to leave the development. Within 10 minutes, you've got everything you need from a tenant perspective. So location is key. The last bit I'll leave you on with this development before I hand back to Johnny is scarcity drives values. There is no more land within JLT. The older commercial and residential buildings will need to be refurbished at some stage, and this offers a massive gap being filled in high-end residential in the area. Okay, Johnny, pass it back to you.
Sam, thanks for that. That was really informative and great to hear about some of the developments that we're working on in Dubai. So thanks for that. Yeah, look, that's the end of the webinar. I hope everyone enjoyed it and certainly found it as informative. And hopefully there was some value there for you to take away. There's a QR code here, which if anyone does want to book a follow-up call with myself or Sam, either to talk about API Global, what we do, how we can support you and your clients, or if you want more details on the UAE projects, that should take you right to a Calendly link where you'll be able to book an appointment with either myself or Sam. So I'll leave it on the screen for a minute or so. If anyone has any other questions, I think most of you have my email address, so please feel free to reach out. But yeah, thanks for everyone's time again. And yeah, please let me know if you'd like to explore anything further today.
Thank you, guys.
Thanks, guys.